Good afternoon, everybody. Good afternoon. I welcome you to today's section. Today we'll be delving into a very important topic, just like the name inscribes market structure, secret institutions don't want you to know. Sharing my basic understanding and my experience so far with market structure, and we're going to be learning together. And I would advise you to actually just stick around to the end of. I'm very, very sure you'll gain something tangible at the end of this video, or even before the end of this video. Anyways, bros, let's get straight into it. So, just like the name is implies, market structure. What does market structure? When you hear the word market structure, what comes once you hear the word market structures? Let's dig into that. When you hear the word market structure, what comes into your mind? Yeah. When you hear the word market structure, what basically comes to your mind? It's simply telling us about how price has been organized, how price has organized itself over time, right? How price has organized itself over time, and it has created a framework of either bearish or sideways movement in the market. And I've basically explained more about market structure, the type of market structure that we have, which is the bullish, the bearish, and consolidating market. But in this video, yeah, we're going to be digging deep to uh, understanding market structure secrets that the financial institutions don't actually want you to understand. And from there, we'll also be digging into. From there, we'll be able to analyze what we are expecting for this week. We'll be able to analyze what we are expecting for this week. And after my whole analysis and everything, you can easily drop any question you have in the chat box or any pair you actually want us to trade, because this strategy actually works on all pairs. All pairs. This strategy works on all pairs. It works 100% on all pairs. So actually stick around. Make sure you put into practice everything that will be taught here, and let's learn together, guys. Let's learn together. So let's get straight to business. Talking about market structure, it's about understanding what this was the analysis I did in our last class, the NFP that we traded, but we weren't able to get an entry. We entered the market with the idea that what market has overbought, which was quite wrong at the same time, and we saw this hesitation here. The market wasn't finding it easy to break above. And at the end of the day, what happened? The news pushed the price above and continued the bullish trend that it has literally been doing. But we were expecting to sell, yeah. We're expecting to sell because anything that literally makes the market come below this level, then there's probability of what? Seeing sell trends. So basically, we're not able to get an entry in the for the news, but you can check out the replay. The replay is up on YouTube. You can check out the replay and actually learn from it. So let's get straight into business. Preferably, I would love to clean up everything here because I want us to actually understand all these things. I want us to draw it up together. I want us to draw up the whole analysis together and analyze this chart from zero to the peak. I want us to analyze this chart from A to Z, from A to Z. So just stick around and let's learn together. Let's learn together. So talking about market structure is about understanding which trend market is actually heading to, understanding who is more in control in the market, whether the bulls are more in control, whether the bears are more in control, or we're having more of sideways movement in the market, which can be consolidations in the market, which can be consolidations in the market. And I've done series of video. I've done series of video about the beginner phase learning and understanding of market structure. Yeah. So in case you're just getting here today, in case you're joining us for the first time, you can actually make sure you check out those replays after this class. Right. But I can tell you, if you've been trading, there's a lot of value to actually gain from this video. Let's learn together. Let's learn together, basically, guys. Let's learn together. So what I was saying, talking about market structure, yeah, Talking about market structure, talking about market structure, like I said, it's about understanding what the trend of the market, understanding who is more in control. And I prefer when doing my own analysis personally, or even doing lives like this, I prefer to do my analysis using the top-down framework. Using the top-down framework, which is understanding what market has previously been doing in the past and going to the higher time frame to see what who is more in control. Because going down to the 15 minute and 5 minutes time frame is basically for entry. And when you start doing your analysis mainly from these levels without checking out what has happened on the higher time frame, you might end up trading the noise. You might end up trading the noise. And at the end of the day, it will end up affecting our psychology. That's why we should actually be on the right side of the market and make sure we check out our structure on our higher time frames. Make sure we check out our structure on our higher time frames, right? Are you following? So to make sure we check out our structure on our higher time frame, right, guys? So let's get straight into business. Let's check out what daily time frame. Let's check out what the daily time frame has actually been doing. So we can see that the daily time frame is strongly bullish, strongly bullish, and we see gold breaking all-time highs every single day this week. We're able to find gold breaking all-time highs, all-time highs. So this is us basically trying to mark out what our significance levels, right? We're trying to mark out our significant level. We've been able to mark out our swing high, and we have this significant swing low right here as well. That if anything that makes market break below this level, which is not visible yet, then we know what we're actually expecting, right? That's giving us a mind shift of trend, right? That's giving us a clue that what the trend is actually shifting its structure. And we have to be very, very much careful and make sure that we're actually on the right side of the market, right? So let's get straight to point, straight to business. So what are we actually seeing here? We are seeing the significant level that market was previously finding strong hesitations breaking above. We finally get a break above that level. You can see market broke back to the downside, gave the third touch, reversed, gave the fourth touch, reversed, was unable to get to that level, reversed, broke above that level, and it's giving us what significant meaning. It's actually passing a meaning. This level is not just there any reason. It's actually passing a message. It's actually passing what? A message. It's actually passing a message. So on gold, what are we basically expecting for this coming week? What are we basically expecting for this coming week? For me personally, unless I start to see uh the only reason that will make me sell in this kind of market structure is when I see change of character. Yeah. When I start to see my COC. When I start to see my COC, this is the only reason why I will start to sell in this market. When I start to see a change of character. But without seeing a change of character, I'm looking for bull. I'm looking for bull runs. I'm looking to buy in this market structure. Yeah. I'm looking to buy. I'm strongly looking to buy based off what? Based off what we are actually seeing, based off what's actually happening in the market, right? Based off what's actually happening in this market. So I'm basically looking for what? I will basically just be looking for buys until what? I get a change of character. Until I'm able to get a change of character that I see what? When I start to see my swing lows actually getting broken. Jesse Prosper, you're welcome. You're welcome. Always active. Always active. We're actually making crazy money this week by God's grace. So we're actually active. Don't forget to like. Don't forget to like this live section. Don't forget to like this live section. Active, active. We're making crazy tons of money this week by God's grace, God's speed. So we're actually very, very active. And we have to we're basically what active and watching out for moves. Watching out for moves. And we always want to make sure that we're on the right side of the market. We're on the right side of the market. I was going to do a breakdown of the news. The news. There was a slight error in the news that we actually traded. And the only reason why we're not able to get an entry was simply because we were expecting a change of character that didn't happen. We were expecting a change of character that didn't happen. Instead of what the market has printed already. Do you understand? Following the proper trend, instead of following the active trend the market has printed already, we were expecting a change of character, and we're not able to get that. That actually doesn't mean that we are wrong at the same time because we didn't lose money, but at the same time we are still wrong, right? And why did I say we are wrong? Because we didn't follow the trend of the market. If we were actively following the trend of the market, we would have gotten an entry from that trade, and basically that's why I should always follow your instinct. That day I was having doubting, I was having some self doubt, I was having some other thoughts. Let me just put it that way because I don't like actually doubt myself. I believe in myself so well. So I was actually having some second thoughts. So that was the main reason why we're not able to get a good entry, but no panicking, just restructuring. We're trading CPI on Thursday. Hopefully, by God's grace, we are going to 300 pips. Hopefully, by God's grace. By God's grace. So we're actually active. We're putting in the work consistently, and let's see how it goes. So sorry for that short break. So let's continue. Where did we stop at? We stop at so I was saying the main reason why we're not able to get an entry on the news that we traded the last time was because we were expecting some corrections. We were expecting a change of character that didn't happen. You can't know that a change of character, you can't change of character has happened unless it has happened. Let me just put it that way. So expecting a change of character is all to put you on the wrong side of the market. We always need to what follow what the market has printed, what market is printing already. The action that market has printed already, that's what we are expected to be. Market will always give blueprint, right? Market will always give blueprint. And what's our responsibility as traders? Our responsibility as traders is to follow the blueprint that market has printed already. That is our responsibility as traders. Our responsibility as traders is to follow the blueprint that the market has printed already. Are you following? So that's the main essence of us being traders. We need to be able to understand, not just you can't project that what a change of character is going to happen unless you can't you project a change of character is definitely going to happen, yeah. But you can't trade the change of character yet unless you are seeing unless the market is already giving you signs that yeah, yo, Nigu, what's up? I'm changing my character, and you're like, okay, yeah, man, I'm just gonna look for a way to continue whatever it is that you're saying. I'm just gonna look for a way to do what to to follow in line with whatever you're saying. Do you understand what I'm saying? But you can't just predict that what a change of character is going to happen and start selling against the market when that change of character, when market doesn't start showing signs of the change of character. I don't know if you actually get that. So I need that to actually sink, and we actually need to put that at the back of our mind always. Always, we need to be self-conscious of that action. We need to be self-conscious of this ideology. We need to be self-conscious of this psychology, right? So let's try to mark out our significant zones, just like you know. So right back on the 4 hours time frame, you can see what's happening. Still strongly bullish, still strongly bullish. And in the news that we traded, I was projecting that what if the bull run continue, I was projecting the market was going to sell, the market was going to buy. I said if the sell that we're expecting didn't happen, the market was going to buy up till 3,600. And everybody that were live can actually testify that what market bought up to that level. See, can you see how markets bought up to that significant level? What significant level is this? 3,600. Markets bought up to that level. Why did I know that? How did I know that market was going to buy up to this level? How did I know that market was going to buy up to this level? This is just a very simple psychological level. That's what there will be a lot of limits orders at. And I was able to project that what market was going to get to that level because there will be a lot of sellers resting at that level trying to push the price down. But if the buyers are still able to overcome, then we'll have continuation of the bulls. We'll have the continuation of the buys. So now what are we expecting? What are we literally seeing? Let's go down to the 1 hour time frame. Right here on the 1 hour time frame, what are we basically seeing? We are seeing some significant levels. I've been able to mark out this significant level right here. I've been able to mark this out. Let's mark out another significant level. We have this highest point that market has ever gotten to before. Market created this level on the 21st of April 2025. Our market actually broke this level last week. So there's possibility that anytime market comes to this level, there's going to be what? Reactions. Reactions. There's going to definitely be what? Reactions in the market. There's definitely going to be what? Reactions in the market, right? Anytime market gets to those levels, there are definitely going to be what? Reactions in the market. Just like I said in the live stream that what? Immediately market buys. I said that market was going to buy. That if market bought, don't forget, I was looking for sales. I was expecting sell during the news, but I was projecting that if market didn't give us that sell, market was going to buy up to 3,600, and you can see market bought up to 3,600, and immediately it got to that level. What happened? Market is rejecting from that level. There are some sellers resting at that level. Only if they are able to overshadow the buyers, that is when you are going to be looking for opportunities to what? That is when you are going to be looking for opportunities to sell, right? That's when you are going to be looking for opportunities to sell. But as long as we don't have that yet, as long as we don't have the market breaking some swing lows, as long as we don't have markets breaking some significant support levels, then there's no reason for us to, right? There's no reason for us to be looking for sales. So do you understand what I'm saying? We need to actually be able to follow exactly what the market is doing. Follow exactly what the market is doing. So, like I was saying, sorry about the little break, guys. So, like I was saying, we have this significant level marked up. This level is very, very significant. Market tested this level four damn times, and markets broke that level. And we have this that market created before in the past on the 21st of April, right? And market was able to break it last week. So those levels actually what? Those levels actually mean a lot. They're not just there. They're not just there. So these are the market structure secrets that the what? That the higher institutions don't actually want you to know. They don't want you to be able to identify those levels where there are a lot of buying and selling orders resting. They don't want you to be able to understand those levels. And I can actually tell you the best way to trade market structure is to actually trade from significant support and resistance levels. To trade from what? Significant support and resistance levels. You shouldn't be trading in the middle of the trend. You should be able to trade from significant levels. And when you are trading at those significant levels, what's the benefit of trading at those significant levels? It puts you on the safer side. You're able to make bigger profits, and you are able to avoid all the noise that is going on in the market. You're able to avoid all the noise that is going on in the market. Imagine getting into the market at this area where this consolidation, the market is just doing anyhow at this point. Even if you are wrong, even if you are right, the market is buying, market is strongly buying, you might still end up getting trapped. You might still end up getting trapped because this minor reversal that happened right here can take you out. See, this minor reversal that happened right here is over. See, this is just 120 pips. And getting into drawdown of 120 pips, you're already getting scared. You're looking for ways to run out of the market. And that's the simple secret that the financial institutions don't actually want you to know. That's the secret they don't want you to know. And what is important, what is significant to actually learn from all these financial institutions? They actually trade from significant support and resistance levels. They trade from significant support and resistance levels. They don't just get entry at any allocation. They trade from significant support and resistance levels, right? And you know there are a lot of ways. Aside marking out zones like this, aside marking out your support and resistance level like this, you can also use what? Your trend line as your support and resistance levels, right? And I've created a series of videos explaining how to do that. I didn't create a personalized video for how to use trendline, but if you check out my previous video, I actually explained how to use trendline as support and resistance levels. So trendline also acts as support and resistance levels, right? So the basic secret that you need to understand in trading market structure is to do what? Trade them from zones, from significant support and resistance level. Discount all this obvious noise, discount them, discount all these noises, discount them, and do what? Look out for significant levels, look out for significant zones, look out for significant zones. Now imagine that last week, after that news, I was still able to get another entry for the buy, but I didn't want the pressure to actually be on us, and I just had to suspend the whole thing to tomorrow when market opens. And even right here, we could have entered for the sale because I knew market was definitely going to what? Reject. Immediately gets to 3,600, and it did. Immediately market created this reversal candlestick, this 1 hour reversal candlestick. We could have gotten it for the sale. And how many pips profit we would have been in if we mark see, we would have been in about 100 pips profits, right? We would have made 100 pips profit, right? Just by what? Understanding all the significant levels. Just by understanding all the significant levels. So that's the main thing I really wanted to understand. Now we're going to be doing some analysis on what we're actually expecting. And we're going to be analyzing these charts from A to Z, and we're actually going to be drawing up signals that we're going to be trading tomorrow. Right? Let me clear this off. Let me try to I'm trying to keep everything minimal now. So let's try to mark out our significant levels. We have this significant level right here. We have this level right here. This was the last high that markets created on Wednesday, and markets broke it on Friday. That level is significant. You do what? You mark it out, right? You mark it out. You mark it out. Let's try to mark out another level. We have another level right here. We have this consolidation zone right here. The market was just doing what? Making a lot of noise around. Market was basically making a lot of noise around this area, right? And what marking out this area? What's the idea behind marking out all this area? We also have this significant area right here. If we try to mark out areas, we can mark out about just not just marking out any area, mark out the significant ones. Mark out the significant ones. How do you mark out the significant ones? Just be open-minded, open your eyes, and try to look out for all these things. Try to look out for all these things. Look out for areas where support level became resistance levels became support, right? And you try to what? Interpret. You try to interpret you try to interpret the reactions. You try to interpret the reactions, and you try to study the movement in that area, right? You try to study the movement in that area. Do you understand me? So now, what are we actually expecting? And marking out your zones, you don't need to mark out 1 million zones. Just mark out the recent ones that close out, the ones that are closer, right? Try to mark out the recent ones that are closer, and do what? Watch out for the moves around them, and just patiently wait. Patiently wait. Patiently wait. Now, how do you identify a change of character? How do you identify a change of character? Now, market is literally following this market structure of bullish run. You'll be expecting market to come back to retest this level and continue the movement to the top side. If market breaks this level to the downside, market might come back to retest this level, right? And still continue the movement to the top side, right? But if you see something like this, a break, you are getting a retest. Then what? And you start seeing like a bearish engulfing candlestick here. It's giving you the idea that what market is giving a minor bearish move that you can easily make some profits off. And you do what? You enter your sell and you do what? Target this area right here. And immediately market gets to this level, you are not looking forward to holding yourself for too long because you know that what? The trend of the market is still strongly bullish, right? The trend of the market is still strongly bullish. And immediately market gets to this level, you can start to see what? Some bull runs like this. You can start to see the continuation of the buys like this, right? You can start to see the continuation of the buy because the buyers are strongly in the market. They are the one in control at the moment. The buyers are the one in control at the moment, right? The buyers are the one in control at the moment. So what are we basically expecting? What are we basically expecting? For tomorrow, we're basically expecting corrections. Corrections. We're basically expecting corrections. We're basically expecting corrections. We can get our correction from here. Our market continue the movement to the top side, or you can see market spiking down as far as this and continue the movement to the top side. But you can't enter the buy until you get what? Some rejection. And then you do what? Boom, you are in on your buy. And you can easily try to what? Apply your trend line. Apply your trend line. What are the significant levels that we have? And look at this zone right here. Look at this right here. Where this top touch of the trend line that happened before the news. And what happened? Spikes. That's why our we need to always keep our edge straight anytime we're trading. Always keep our edge straight. Markets will always tell us what to do. Seriously speaking, markets will always tell us what to do. We only need to do what? To be able to listen properly. Now, this kind of thing can happen right here, right? This can happen. The situation where markets might not come as far as touching this zone right here. Market might not come as far as touching this zone right here. But instead, what will happen? Market might just touch and tap into this trend line. And what? Continue the movement to the top side massively. Massively. And when you want to get into this kind of signal, what do? You basically enter like this, right? You target the current high, right? As long as you get your reversal, you get your confirmation. Entry confirmation is very, very important, right? Entry confirmation is very, very important. And you keep what? You keep your stop loss below that zone. Below that zone. Keeping your stop loss below that zone is even giving us about 60 pips stop loss, which is very, very cool and okay. And trading like this is actually giving us what? This is very, very realistic. This is very, very realistic. Imagine us targeting this high that market has created, right? Imagine us targeting this high that market has created before, right? Imagine us targeting this high that market has created before in the past. What's happening? We're getting perfect 6 to 1 risk to reward. And this is actually what? Very, very realistic. Very, very, very realistic. This is very, very realistic, right? So this trade is actually an A plus setup, and I'm actually expecting reactions from this trade tomorrow. And what is the entry confirmation? For those that are asking, what is the entry confirmation for this kind of trade? How do you know when the market is already okay? Let's say markets reverse up to that level. Just like you will ask, or you are curious to know that how do I know that what? Okay, how do I now enter? How do I know that market is ready to actually sell from that level? The simple way for you to know is to actually start looking out for what? Candlestick patterns in that area. Candlestick patterns in that area. And what are the various candlestick patterns? You can start to look out for what? Your pin bar. You can start to look out for what? Your pin bar. If you get your pin bar candlestick right here, you get your bullish engulfing candlestick after the touch of this trend line. You should do what? Stack your lot size and start buying massively. Start buying massively, right? Because massively, we're on the right side of the market, and we're not actually scared of anything that any outcome that might actually come from it, as long as we are what? As long as what? We are managing our risk. And just like the 6 pillars in Forex trading: technical analysis, your fundamental analysis, your risk management, right? Your risk management. What are the other ones? Entry confirmation, entry and exit strategy, right? I might actually end this very, very soon. But I hope you've been able to significance from this level, from this trade. Draw up on your charts right now. Draw it up on your chart, monitor it, and let's see how it goes together. That'll be all for now, guys. And don't forget to click on our Telegram channel. We'll be actively sending signals. Actively sending these signals this week. Let's make profits together and see you on the online. See you on Telegram and stay blessed. So these are the simple straight from significance. All this straight from the best way to actually what? Maximize your profit in Forex trading. That's the best way to actually what? Maximize your profit in Forex trading. Stay blessed and stay safe. That will be all for now. I'll send the signal into our Telegram channel and let's actually monitor it together. That will be all for now, guys. Shalom. Non-stop Forex for life. Yeah, sure, sure, sure.